Let's kick off with the shilling. Of course, it continues to be quite topical. What do you make of the central bank's latest moves to change its overnight lending rules from the bank's window?
You're probably too young to remember, but there was a Norman Lamont moment in the United Kingdom when Lamont actually had to fold his hand at the time when the British pound was being kicked out of the European exchange rate mechanism. And I think there's been a similar Lamont moment at the central bank. There's a growing realization that neither the banks or the economy could tolerate interest rates which were just going up in a straight line. The overnight rate, I think, got as high as 26%. So I think essentially, the central bank is trying to recalibrate its approach when effectively they're going to have to bring rates lower from where they are. And therefore, I think we're going to watch a continued trend lower again in the shilling because essentially I think the interest rate prop isn't really there.
Is there credibility being brought into question once again? Because when they brought this new policy online in changing the rules for lending from the overnight window, which sent those interest rates spiraling to almost 30%, many were saying it was unsustainable. We saw the shilling retrace from its lows of 95.60. It did firm up, but yet again that policy move wasn't sustainable. Now it's had to change it once again.
I agree with you. I think there's much less room for maneuver with unorthodox monetary policy on the frontier. And I think this year, unfortunately, we've seen a number of moves which have been unexpected and caught the market off guard. And that's drained a little bit of the credibility at the central bank. I think the central bank came back to assert its ownership over the situation with this very sharp increase in the overnight rate. And then I think you got no real traction on the shilling, as you correctly noted. The shilling refused to really move. It moved up a couple of percent, but nothing serious. And I think the cause and effect then came into question. And essentially, we've had the Treasury say to the central bank, look, this is not working, and we've got to look at another way forward. I think, unfortunately, the shilling will remain weak now because the interest rate curve will have to come down. The tolerance level for higher interest rates is simply not there.
Let's move on to some positive news out of companies. Listed companies, Transcentury swinging to a pre-tax profit, 165 million shillings, and that's from a loss of 48.6 million shillings the previous year. Revenue up 40% there. A nice turnaround story. Where did you see the key revenue drivers for the period?
Well, it's quite interesting. I mean, I think, the East African Cables, which is one of their portfolio companies, has turned around considerably. And I think that's part of the turnaround that you've seen in those results. They're obviously pushing a lot more product down their power pipeline, their power businesses. But the jewel in the crown for Transcentury is I think, going to be their stake in RVR, in the railways, which by all accounts has already turned positive on an earnings front, and I think has a lot of potential. The transport system has in East Africa, the railway has not played its part, and I think essentially they got a plan here, which is to bring the railway up to its proper position. And I think over the next 2 and 3 years, a lot of economic value will be unlocked from that investment. So organically, I like what they've done, and I also like the medium-term story as well. It looks a little bit expensive still on a PE basis, but I think that PE comes down considerably at the full-year mark.
It has been quite punished, though, since first listing on the exchange. Now at 38 shillings, down 16 shillings from the price 3 months ago of 54 shillings. Do you think investors will take well to the numbers that we're seeing out today and possibly see some positive respite for the stock in the coming few sessions?
Well, I think, at 54, that was a very, very elevated price. They had not really tested the market with any slug of shares. It was done on very low volumes. And I think 38 is a fairer equilibrium type of price. I don't think we're going to see it run away to the upside, but I don't think the downside is that large. I think it's quite limited to the downside. But I think the real movement in the share price will happen around before or after the full year results. At this price, I think it's fairly priced.
3% earnings growth, earnings per share growth for Kakuzi to 4 shillings 35 cents. Some good numbers there if you compare it to other companies or other stocks in the agricultural sector. No dividend declared, though. What are your thoughts on this company, especially with it trading at a PE of what, 4.4 at this stage?
It's a very, very cheap stock. I think investors were very nervous after they saw the results from Limuru Tea, which saw a production haircut of 50% in the first half. They mentioned that there was a reduction in production, but obviously nothing to the quantum that we saw come out of Limuru Tea. They're not only a tea play, they're also an avocado play, and the earnings from that tend to come in the second half. I, for one, think it's a very cheap stock, and I think there's lots of upside potential. And I think yesterday's price reaction was indicative that, you know, it remains an undervalued stock. A P of 7 or 8 surely doesn't make it expensive, and I think we could easily see that, which would be a 50% uptick in the price.